Right now, an autonomous artificial intelligence is actively managing a crypto wallet. And it isn't trading meme coins,
No, not at all.
right? It isn't trying to time the market or do anything like that. It is actively funding physical wet lab experiments designed to cure human aging. And it's doing this by completely bypassing traditional human academic gatekeepers.
Which is just a massive shift.
It really is. Welcome to the Deep Dive. We have a fascinating stack of early 2026 financial reports, biotech trial results, and technology forecasts on the table today for you.
A lot of ground to cover.
Oh, yeah. And the overarching theme staring back at us from these sources is something we are calling the era of execution.
I like that phrase. It really captures what's happening.
Yeah, we are going to explore how the massive, wild hype around AI, crypto, and biotechnology from the mid-2020s has fundamentally shifted. It's morphed into this real-world, institutional-grade execution that is quietly rewriting how the world operates.
The transition we're seeing in these documents is, well, it's profound. Because across banking, digital assets, and pharmaceutical research, the experimental pilot phases are just over. They've ended.
Right. The sandbox is closed.
Exactly. What ties all of these seemingly disparate fields together is the strict maturation of regulatory frameworks and, a strict demand for measurable returns. We are no longer looking at concepts. We're looking at the heavy operational infrastructure.
Okay, let's unpack this. I want to start with where the money lives. Specifically, small and medium enterprise banking.
Right, SME banking.
Yeah, because if you rewind just a couple of years, AI in banking basically meant you opened your app and a slightly frustrating chatbot popped up.
Right, to help you find your routing number or something.
Exactly. It was a conversational novelty. It was like a clueless intern who just answers FAQs. But the 2026 data shows this tectonic shift toward agentic AI, acting as an autonomous CFO for these businesses.
And the distinction between a conversational assistant and an agentic system is entirely about proactive execution.
Okay, proactive execution. Break that down for us.
So an assistant waits for a prompt. It needs you to ask a question. An autonomous agent, on the other hand, is analyzing a constant stream of background data. It identifies a problem, formulates a solution, and then actually executes that solution without needing permission.
So it's more like a senior CFO who spots a cash flow pothole miles away and just steers the company around it.
That's a great way to look at it.
Yeah.
And the sources project that this kind of embedded finance transaction volume is going to exceed $7 trillion by 2026.
Wow. 7 trillion.
Yeah, trillion with a T.
That tells me this isn't just some shiny add-on feature. It is the new core distribution architecture for money. But how does the AI actually get the authority and the visibility to act like a CFO?
It's driven by regulatory evolution, specifically the expansion of open banking laws.
Okay, like what?
Well, in Europe, it was mandated by the PSD3 framework, and in the U.S. by the Consumer Financial Protection Bureau's Section 1033.
Right, Section 1033.
Yeah. For decades, traditional banks operated as walled gardens. They hoarded your data. But these new regulations effectively force financial institutions to tear those walls down.
They have to share it.
Exactly. They mandate that a business's complete financial profile has to be securely shareable via API.
So the AI isn't just looking at like an isolated checking account balance.
No, not at all.
It's pulling in the company's mortgage data, their insurance premiums, maybe the historical payment behaviors of their clients, and even outstanding supply chain invoices.
Right. It suddenly has a panoramic view.
That's incredible.
And it pairs that panoramic view with a technology called retrieval augmented generation, or RAG.
RAG.
Right.
Yeah.
So rather than just relying on its baseline training data, the AI constantly dips into the company's live enterprise resource planning software, their ERP.
Like their daily operational ledger.
Exactly. And by synthesizing that live ERP data with the broader open banking API feeds, the AI can predict cash flow gaps weeks in advance with 95% accuracy.
95%. That completely changes the nature of business risk. I mean, let's say you run a mid-sized logistics company.
Okay.
And the AI sees that 3 of your major clients usually pay their invoices late in February.
Right.
And simultaneously, it sees your fuel cost has spiked. Instead of just sending you a red alert saying you'll miss payroll next Friday, it actually solves the problem.
Yes. Because it's authorized to autonomously sweep funds from a high-yield account to cover the shortfall, or it can instantly apply for a floating line of credit.
A micro-duration line of credit that expands and contracts based on that real-time analytics stream.
Exactly. It creates an invisible banking experience. The financial plumbing simply works in the background, keeping downtime at absolute zero. The friction is entirely abstracted away from the human.
Wow. So if we have this programmable, highly regulated, and invisible financial plumbing, quietly keeping local businesses alive, what happens when we apply that exact same architecture to the most notoriously slow, friction-heavy process on Earth?
You're talking about early-stage scientific research funding.
Yes, I am. The sources highlight that the cryptocurrency market has officially entered what they call the Regulation I era. I for institutional.
And we see the foundation of this institution era really clearly in the Hong Kong market right now.
Right, with Hashkey.
Hashkey and Edit Financial. They just launched Hong Kong's first regulated silver-backed real-world asset tokens, or RWAs.
You're a company called Timeless Resources, right?
That's the one. Now, on the surface, tokenizing silver might sound like kind of a niche financial play.
Yeah, why silver?
But the implications for infrastructure are massive because it establishes a precedent for trust. When they launched this, the Securities and Futures Commission in Hong Kong, the SFC, they issued a no further comment response.
Which in regulatory speak is a massive green light.
It is. Moving a physical commodity like silver onto a blockchain under the purview of a major global regulator proves that the underlying ledger technology is finally trusted. Trusted for secure custody.
Okay, I see where you're going with this. Once you establish that institutions and regulators trust these blockchain rails to hold physical commodities,
then you can use those exact same rails to hold and fund something infinitely more complex, like intellectual property for drug discovery.
Oh, this is the catalyst for the explosion of decentralized science, or DeSci.
Exactly.
And this is where the story gets really wild. The sources highlight Bioprotocol, which is a DeSci platform that recently raised $6.9 million.
And seed funding, yeah.
And this isn't just fringe internet money. They are backed by major players, Arthur Hayes' Maelstrom Fund, Animoca Brands, and they're using this newly trusted regulated crypto infrastructure to deploy what they call bioagents.
Which are essentially autonomous AI co-scientists that operate entirely on-chain.
Let's look at the mechanics of this because it honestly sounds like science fiction. They launched their first bioagent named Aubrey.
Right, A-U-B-R-A.
Yes, and they launched it in partnership with Aubrey de Grey, the famous longevity researcher.
Yeah.
They trained the AI on his massive corpus of lab data.
And the results were immediate.
Within weeks of going live, Aubrey minted over 1,000 scientific hypotheses directly onto the blockchain. And it generated over $900,000 in actual research funding.
In just a few weeks.
How does an AI mint a hypothesis? And why does that generate almost $1 million?
So by minting a hypothesis, the AI is analyzing vast data sets to generate a novel chemical structure or a new biological target.
Okay.
It then instantly registers that specific data package on a blockchain. This creates an immutable, time-stamped record of intellectual property.
A patent, basically.
An on-chain patent, exactly. And because that IP is tokenized, investors can buy a fractional stake in that specific hypothesis.
Whether they are retail crypto holders or institutional funds.
Exactly. The $900,000 raised flows directly into connected on-chain wallets. And the AI itself directs that capital straight to contract research organizations to fund the physical wet lab experiments.
Okay, wait, I have to push back here. Wait, so we have autonomous AI agents managing crypto wallets to fund wet lab experiments. Is it actually safe to bypass academic gatekeepers and hand over complex drug discovery funding to a decentralized crowd?
I mean, the safety concern is totally valid. And rigorous downstream clinical testing is still absolutely mandatory.
Right, you can't just skip the FDA.
No, you can't. But you have to look at the severe systemic failure of the alternative. The traditional academic grant system is broken.
It's incredibly slow.
It's a slow, hierarchical grind. A brilliant researcher might spend 40% of their time writing grants instead of doing actual science.
Just begging for money.
Yeah. And promising research constantly falls into what the industry calls the valley of death, which is the period where initial funding dries up before the drug can ever reach a human trial.
Okay, I see.
The DeSci model uses blockchain to radically compress the administrative friction of that funding process. The patients who are suffering from degenerative diseases, they do not have a decade to wait for the traditional system to slowly churn through its gatekeeping.
Right. They need cures now.
They need execution today. The urgency of the patient is what justifies bypassing the old system.
So because of this hyper-accelerated funding and the incredible speed of AI modeling, we're finally seeing these computer-generated molecules break out of the digital realm,
They're crossing over into the real world.
actually crossing the blood-brain barrier. We aren't just talking about computer simulations in 2026. We're looking at massive clinical breakthroughs, particularly in neurodegenerative diseases.
Which have historically been an absolute graveyard for drug development.
Totally.
The ultimate metric for the era of execution is physical healing. The clinical data emerging right now demonstrates that this accelerated pipeline is actually working.
Here's where it gets really interesting. Let's look at a specific example from the sources. Gain Therapeutics.
A fantastic example.
They presented Phase 1b data at the ADPD 2026 conference in Copenhagen, I believe.
That's right.
And they showed a massive breakthrough in Parkinson's disease with a drug candidate called GT02287, which is an allosteric enzyme modulator.
Right. And to understand the magnitude of this breakthrough, we really need to look at the underlying cellular mechanism.
Break it down for us.
In many Parkinson's patients, a specific enzyme called GCase becomes structurally misfolded. This is often due to a genetic mutation.
Okay, G-case.
Yeah. You can think of the GCase enzyme as a cellular garbage truck that's designed to clear out toxic waste in the brain. But because the enzyme is physically crumpled, it cannot perform its function.
So the toxic cellular waste, specifically a lipid called GLEF,
Yes.
that waste just piles up in the brain, and that buildup is what causes the neurons to degenerate and die.
That is the root cause for these patients. So GT02287 is a small molecule designed to penetrate the brain, find that specific misfolded GCase enzyme, bind to it, and physically reshape it.
Wow. It unfolds the crumpled garbage truck.
Exactly. It unfolds it so that it can start clearing out the waste again.
And the data they presented is stunning. They proved it actually restored the enzyme function in human patients.
It did.
They measured that toxic garbage biomarker, the GLUF, in the patient's cerebrospinal fluid, and it had significantly reduced back toward healthy levels.
Which is definitive proof of central nervous system target engagement.
The holy grail for brain meds.
Right. The drug is doing exactly what the AI models predicted it would do in the human brain. And clinically, this resulted in the stabilization of the patient's MDS-UPDRS scores.
Which is the standard rating scale used to measure the physical and cognitive symptoms of Parkinson's, right?
Yes, it is. And this data strongly suggests that they haven't just created a drug that masks the tremors, they have created a disease-modifying therapy that halts the actual progression of the disease.
That is huge.
They are moving directly into phase 2 trials in the third quarter of 2026.
But, here is where the narrative gets incredibly complex. When you look at the business reality of this execution phase.
The financials.
Yes, the financials. Let's look at the 2025 full-year reports from Ascentage Pharma. Their product sales surged 90% year over year to $82.1 million.
A massive jump.
Driven primarily by ulvermbatinib, which is their leukemia treatment, which saw sales jump 81% to $62.2 million. They also launched a new BCL2 inhibitor called lisaftoclax, and they have 9 phase 3 trials underway.
Ascentage is a prime example of a company transitioning from the discovery phase to a massive global commercialization strategy. They are executing on multiple fronts at once.
Okay, but I'm looking at their balance sheet, and it seems to contradict everything we just discussed about DeSci efficiency.
How so?
Well, despite the massive sales jump, Ascentage reported a net loss of $177.7 million, and their research and development spend actually jumped 20% to $162.7 million. If AI and these new DeSci models are so efficient, why is the R&D bill still skyrocketing?
It's a great question, and it highlights a crucial distinction in the pharmaceutical pipeline. Artificial intelligence and decentralized funding models drastically reduce the time and capital required for the discovery phase.
Right, finding the molecule.
Yes. Minting the hypothesis, finding the molecule, running the initial wet lab tests, that is now incredibly fast and cheap. However, AI cannot hallucinate a phase 3 human clinical trial.
So the digital part is cheap, but the physical reality is still incredibly expensive.
Exactly. Because to prove safety and efficacy to global regulators like the FDA or the European Medicines Agency, you still have to recruit thousands of human patients across multiple countries.
Right.
You have to administer the drug, monitor them for years, and meticulously document every single biological response. The sheer physical logistics of running 9 concurrent phase 3 human trials requires an ocean of capital.
So the bottleneck hasn't disappeared, it's just moved.
The bottleneck has simply moved from discovery to clinical validation.
So to sustain this era of execution, to actually push these thousands of cheap AI-discovered drugs through the incredibly expensive physical trial phase, requires massive structured capital pipelines and completely streamlined regulatory environments.
Which brings us to the industrial infrastructure being built right now, particularly in Asia, to solve this exact bottleneck.
Right, China's 2026 strategy.
If we look at China's 2026 industrial strategy, they have fundamentally shifted their approach to AI. They no longer view it as a standalone software sector.
It's an industrial layer now.
Exactly. It's treated as an industrial layer. They are heavily focused on embodied AI, integrating these intelligent systems directly into medical devices, advanced manufacturing, and clinical logistics.
And they're pairing that technological push with really aggressive regulatory reform.
Right, absolutely. The National Medical Products Administration, the NMPA, has instituted massive fast-track review processes for urgently needed therapies.
They cut the review time for new clinical trial applications in half, from 60 days down to 30 days.
They are literally clearing the regulatory traffic jams.
However, there's a complex economic trade-off here, isn't there?
To gain commercial access to the massive volume of the Chinese market, companies must get their drugs onto the National Reimbursement Drug List, or the NRDL.
And to secure a spot on that list, pharmaceutical companies almost always have to agree to steep, mandated price cuts.
Correct.
So you get your drug approved twice as fast, and you reach millions of patients, but your profit margins per pill are drastically squeezed.
Which circles exactly back to Ascentage's financials.
Right. You need massive global volume to make up for those thinner margins, and you need an astronomical amount of upfront capital to fund the trials required to reach that volume. Where does that hundreds of millions of dollars come from if the traditional grant system is too slow?
It comes from highly sophisticated, purpose-built financial markets, and the Hong Kong Exchanges and Clearing, the HKEX, recognized this bottleneck years ago.
You saw it come.
They did. They've actively constructed a massive, multi-tiered biotech product ecosystem specifically designed to feed this massive capital requirement.
And the 2026 reports outline 5 distinct mechanisms investors can use to access it.
Yes. 5 different ways to pump liquidity into this sector. They aren't just relying on standard stock purchases.
Obviously, you have direct biotech equities.
Right.
But they've also built out biotech-linked ETFs, which grew from $1.5 billion in 2021 to $13.8 billion in early 2026.
That is a near 10-fold increase in foundational liquidity.
Incredible.
But the ecosystem goes much deeper to attract different risk profiles. They offer structured products like derivative warrants.
For the high-risk speculation.
Exactly. And they launched the Hang Seng Biotech Index Futures, the HSBIO, which allows massive institutional hedge funds to manage their exposure. And crucially, they built the northbound Stock Connect.
The Stock Connect. So what does this all mean? It sounds like we are building a massive multi-lane superhighway.
That's a great analogy.
With the HKEX capital lanes providing the fuel, and the fast-track NMPA lanes clearing the traffic just to keep up with the incredible speed of AI-driven drug development.
That mechanistic flow is the defining characteristic of the era of execution. The components are no longer isolated novelties.
They're all working together.
The agentic AI predicting the SME cash flow, the regulated crypto tokens holding real-world value, the AI minting biological hypotheses, and the institutional capital markets. They are all deeply integrated into a single, high-speed industrial process dedicated to physical output.
It really changes how you look at the news cycle. For you listening, think about the sheer scale of the journey we just tracked through these sources.
It's a huge shift.
It starts quietly in the background of a mid-sized business, where an invisible, autonomous AI bank manager is seamlessly rebalancing credit lines to keep the lights on. It moves to the blockchain, where crypto-funded AI scientists are generating thousands of novel chemical structures a day.
And funding them.
And it culminates in a very real physical hospital room, where someone suffering from Parkinson's or leukemia is receiving a breakthrough treatment that literally unfolds their cellular enzymes and restores their health.
The hype has finally metabolized into reality.
It really has.
The infrastructure is built and the throughput is accelerating. But as we look at this acceleration, we have to consider a profound structural shift that these sources point toward. We are witnessing the rise of what we might call shadow R&D.
Shadow R&D. I like the sound of that. What is that?
Think about the shifting architecture of intellectual property. For centuries, scientific discovery was housed within university labs, funded by government grants, and validated by traditional academic peer review.
The university owned the patent, and the journal owned the prestige.
Exactly. But as scientific discovery increasingly migrates into decentralized autonomous organizations funded entirely by global crypto liquidity,
Right.
and driven by encrypted AI agents minting thousands of novel chemical structures directly onto a blockchain, the old architecture is entirely bypassed.
Wow. That is a staggering shift in ownership. I mean, if an AI agent makes the foundational discovery on a decentralized network and a crowd of anonymous token holders funds the clinical trial, the traditional university patent system is rendered obsolete.
Completely obsolete. Who ultimately owns scientific truth in an era of proprietary on-chain AI science?
That is a wild thought, a completely new paradigm for who gets to own the building blocks of human health. Something for you to definitely mull over as you go about your day. Thanks for joining us for this deep dive into the era of execution. We'll catch you on the next one.